Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
The news, see what kind of news we have today. And right now, today is Wednesday, April 14th, and we have a red folder here at 12 o'clock. We'll be done by that time, but Fed Chairman Powell speaks. That will probably move the U.S. market a little bit. And at 9:30 later on tonight, the Aussie has some announcements and things. So mainly for our session this morning until noon, looks like things are going to be pretty calm and not too eventful. You may see some consolidation of the U.S. waiting for any announcements, but I don't think that's going to be a real huge deal today. And looking at our heat map, we're looking at to see what's our strongest pairs, what are the weakest pairs. And you can see the Swiss franc is weak on all four. That's right here at the bottom. New Zealand is fairly strong on the higher time frames, and the yen is stronger on the lower time frames. And the US dollar is relatively strong they're in the upper third. So we'd be trading pretty much to the strength of the Aussie and the New Zealand and possibly the US dollar. The dollar is gaining strength a little bit here. So if I see there was a Swiss yen pair that came up, and we'll take a look at that one. And so I usually take a look at that thing just about for all the, before I take a trade, I usually just see which one's strong, which one's weak at the time, and try to gauge accordingly to whether or not it's worth the shot at getting my 5 or 7 pips or the 20 pips, depending on what your target is. This is the US Swiss pair. We did get an alert on the US Swiss. It did had the alert, basically, it was on the 15-minute chart. Let's see if I get this. It was a 15-minute alert.
And everybody.
Good morning, CB. We had an alert on the 15-minute chart. Did it go away? Let's see. I could have swore I saw one there earlier. Looks like it may have gone away already, but there was an alert right down. Well, I could have swore I saw one earlier. I'm not sure what happened there. Anyway, I did have an alert right around in this area. I did have put a buy stop in going for 5 pips. It does have the Swiss is weak and the dollar is stronger to the weak to it. I'm sorry, I'm not sure where the alert was. It must have been right down here, I guess. But there was about an 18 pip target from this area. There's about 18 pips. I'm going for 5. And here was the alert. It is in an uptrend. We do have the moving averages. It is starting to fight over around this 200 moving average. That's the purple line. But if it can solidly break through that, we may have to be a reasonable trade to go for I'm just going to go for 5 pips if it comes on up to that high. If it doesn't if it can't get me into the trade, then I will just pass on it. So, and we'll see if this starts to really start pulling back a little bit, then we'll reassess the situation. I do like this. There was the trend line from this high to there's a hit coming down. So right there is a trend line. We did get the break right at where the arrow was. So there's where the break was. It did come back down, retested. We got the break. It broke above this candle right here, this small little pivot before it was rejected, came back, broke the trend line, came back, retested the trend line. Now it's working its way back up again. So this little area right in here, this was the key candle that got broken on the trend. Broke it, came back, retested the trend line, and now if it comes back up, it should be, I'll be looking at gaining past this little area over here to the, and my target is below this. The body of this candle actually be right in this area. I'm just bringing it back down just a little bit lower and see if I can get my 7 pips or maybe even 10 pips out of this one. If it gets triggered. Right now it's not triggered. I don't believe it's triggered yet. It's still waiting to be be triggered. And let's see, we have a British US pair. Let's take a look at that one. That's on the 5 minute. Let's take a look at the Euro US. The yen was strong, or the US yen. The yen was strong on all the pairs. So we'd be trading in the strength of the yen. And the yen is the second currency of the pair. So we're looking at taking this thing short. We do have a down arrow. Are we in an uptrend or a downtrend? So we check the zoom out and see if we're in a downtrend with a down arrow. That's in line. It's in with the trend in our favor. Now the question is, do we have enough room to the downside? Here is the alert. Here's the target. That's only 5 pips. Not enough room for, I'd like 15, minimum of 15. 15 for a 7 pip target, 20 for a 20 pip target. Right now we only have 5 pip to the target area. Again, not enough room. This is a bounce arrow to go, but the problem is the zone's too close. So we'll pass on that one. Any questions so far?
No.
I'm not muted. Okay, I was wondering if I was muted here.
No.
Okay.
No.
Okay. And let's see, what else do we have here? And let's see, right now we're just waiting to see if something pops up here. Usually Wednesdays are fairly decent days, so we'll see if it is today or not.
Can't believe it's Wednesday already.
Yeah, time goes by fast.
Oh, there we go.
No, we got one here. See, these are all 5 minute. I'll check it. What's 5 minute? 5 minute. If it's on a 5 minute chart, unless it's really extra special, I will usually only go for 5 pips, but I still want 15 pips to the target area. This one still looks like it's going to be a little bit tight. Here's the arrow. There's the price right now. And that's only 6 pips to the upside. Again, you want to have you don't want to be fighting the spread for this particular pair, the Aussie US. If you look over here, see what the spread is. It's about a 1 pip spread, just a little bit under. Yeah, right. Saying right around a 1 pip spread. You're going to lose. You see where these red line and the white line is. That's your spread. And remember that whenever you get into a trade, whatever price you're not going to want to get, that's the price you're going to get. In other words, if you want to go long on this one, the price you're going to get is the white line. If you want to go short, the price you're going to get is the red line. So, but you're going to lose your 1 pip going in, you're going to lose a pip going out. If you only have a 5 pip target, you're already giving up 2 pips for the spread just to get in and out of the trade. And then it only leaves about, if you only have a 5 pip target area, that only leaves you 3 pips for a profit. And the risk reward just isn't there. It's just too tight. It's just too tight. So I like to see at least 15 pips primarily, and then I usually go for about 7. I'll take 5 and call it a day. US yen, we already looked at that one. Let's see, that's about all we have had so far. We did get a German 30 earlier.
I just had an S&P 5 that's not showing up on your.
Did you get one? Okay, let's take a look. 5 minute chart.
Yeah.
Yeah, that one. So it looks like by the same type of scenario here, right up by the zone. It doesn't hurt to check the 5. If you get your alerts on the 15-minute chart, which is the one that I prefer to do, it doesn't hurt to take a look at the 5 minute chart and see if there's a zone in the way. Because oftentimes you still need to get through that little zone in order to get to your target. But right here, you can see this is, we are probably in an uptrend. The market's been making new highs here lately, so we are in an uptrend. And we have 2 zones right up above us, right where this thing pulled back. This thing could get ready to start making another correction. We had a strong move up, came back down, come back down, came up, retesting, build 2 zones. That gives us a trend line from here to here. There's our trend. There's the high, came back down, retested the trend line. And it's a valid retest when it pulls back like it is. It came up tested, couldn't hold it. And so right now there's the anchor, here's the hit. When it comes up for the third hit, which is right about where we are right now with this candle, this may be time for looking for maybe a possible reversal. And we do have another trend coming down. The upward trend goes from, I kind of like these two candles are pretty much, here's a low, higher low, higher low, higher low. Here's a nice little trend right in there. If this thing does break, I'd be looking more for a trend, for a target this would be the target zone. If I end up getting a down arrow, this would be my target. This trend line would be my target. And we're going to see if this area here can hold. With the dollar being relatively strong, this thing should, I'm thinking right now the dollar is about in the middle of the pack. So right now I would expect this thing maybe come up, test it, and then give us another little area to go short possibly. We'll keep an eye on this one. I like it better as a short right now than as a long. And we have another trend line, and we can also use this trend line. This is the yesterday, this is the overnight low. And here was the money zone right in that area. It kept making, making higher highs before it pulls back, rejects to a higher level. It pulls back up, rejects, and we'll see what it does up here. Right now it's inside this range, trading inside this range. And the range itself, I believe, is probably only going to be, let's just take it from the line to the line. And that's 40 pips. So there is room to the downside but I'd have to give this one lots of wiggle room. I said, I'm not a big fan of trading the indexes because they're so volatile right now. I don't always know which direction they're going to go. I do like this one on a 5-minute chart to go short if we can get this thing to come up and reject. But we have this moving average. This is still pointing up. I don't like that part. And look at the 200 moving average. And that's way down here. So actually, let me do something here. Put an extra moving average on there. We don't really need that right at the moment. Here's our arrow moving average. Here's the 200 moving average. You can see these lows as it comes in. It still has an upward trend. But you see the space between here and the moving average is getting tighter and tighter. This is fairly wide. Here it's tighter. Here it's tighter. This thing's still pointing up. This one's pointing up. It's not quite ready to give it up yet, but I'd like to see more of a break below this moving average, come back, retest, and then break down. So we'll stay away from that one for right now. Let's see, any questions? Quiet group this morning.
Need their coffee to kick in.
Couldn't quite catch that, Christine. Say that again.
They need their coffee to kick in.
Oh, yeah.
Or the zip fizz as.
Yeah, I did have my coffee, but now I'm going to work on my pot of tea here. So, and right now all we can do is just wait and see if we should possibly get another something on the 5-minute, another 2 minutes. We still have another 12 minutes before we should get another 15-minute alert. And let's see, in the meantime, we'll go ahead and take a look at our heat map. Actually, we already checked the news. We'll check the heat map. And just again, to reiterate, here's our 1 hour chart. Here's our 30-minute. Over here's our 15-minute. And then we have a 5-minute chart. And we can see that New Zealand that's the strongest on the higher time. I usually start with the higher time frame and see what's the strongest and what's the weakest. The Swiss is the weakest on the 1 hour, weak on the 30-minute. It's the lowest on all 4 time frames. So right now the Swiss is the weakest of the 8 currency pairs. This is the weakest. And I'd like to see at least a 3-point spread like notice that right now Swiss is 0. I'd like to see at least a 3, which would be like the euro. If we got a euro Swiss trade coming in, I'd be willing to take that if it's everything else is looking right, because I'm showing at least a 3-point spread on the 15-minute, excuse me, on the 30-minute chart, which is this lower left one. I like to see at least a 3-point spread on this before I take it. That shows me there's enough strength to the downside. Maybe see a pullback and then have the euro pull back, come back, keeping this strong, and then watching it flip over on this. As long as the price is going down, it's not going to go up. And if it's going down in the lower time frames, you have to wait for it to flip on the lower time frames to continue the direction. And it looks like we had a nice little, here's the arrow, here's a bounce off of the zone. It's coming back down. Now we do have a nice little trend line going on this, that's the S&P. Oh, let's just keep working on that one. You can see this trend line here is now a lot steeper. This one's got a lot steeper. And here's your M. Here's part of your M right here. We have a low. Here's a left shoulder of the M. Here's the shoulder to the middle of the M. Now we did have a little bit of a break, but it broke a little bit lower. Actually, I'm just even like taking this down a little bit lower to the moving average. I like that one. Came back. Here's the middle of the M. Here's the right shoulder. Now we're going to see if this is going to break or if this is going to hold. It looks like it came up, couldn't break through the top of this one. So here's our upper trend line. Looks like it's rejecting the zone, the red zone. If we can get a break of this trend line and retest, then we could have a possibility of a possible trade to the downside. I'd be looking at a break on this point. Here's the moving average. And now we look and see if we have enough room. This is just setting it up just to make some projections here, see if there's even a trade here. That's 23 pips to the downside. It would be somewhat contra trend because it is in an uptrend with the S&P. Double check that. 1, 2, 3, 4 green, 2 red. It's in an uptrend. But if we get a break of the trend line, I want to see a break this where this blue line is, at least retest this zone, and then we might have a trade possibly. But I would take it to it would be contra trend. I'd only go for a $5 move with a $10 stop on this. I'd like to see an arrow, down arrow. Check the 1 minute chart here, see if we get anything here. So here's a zone on the 1 minute. Even though this is on a 1 minute zone, it's still a fairly decent zone. And if it breaks the green zone, then we'd be looking at other points on this trend line right here. Here's a hit. It would have to get through this little area right here. So that's where you start gauging how much of a move, how much of a target, or how much of a plus side would you want to be on this trade. This would be, let's see, it's 41, 42. Let's see, 43 to say 38. $43. So 38 is $5 move is all the way down here. And you have this little zone to get through. That's one reason I don't like this too much, because it's uptrend and it's got to get through two barriers before you even get your 5 pip target, your $5 target. Always know where you want to get out and make sure that you have enough room to make the trade worthwhile. Know where your stop needs to be and know where your target's going to be.
You have a question?
Yeah, I'm looking. Yeah, say entered the CAD British CAD sell back entry on 15-minute time frame. Seems to be a green zone and a trend on the 5-minute, and it's buy 15. So let me read this again here. Let's take a look at the British CAD and see what he's talking about here. He or she, British CAD, 15-minute. This looks like a nice bag entry on the 15-minute. And say the first thing I'm doing is see which one's stronger, the British or the CAD. And the British, is he British CAD? Yeah, British CAD. Canadian dollar is relatively weak. It's actually the British and the Canadian dollar are pretty much fighting for last place. So here we have the bag entry. This is a bounce arrow go. Now the question is, what's our trend? And looks like we are in a downtrend. So we have 1, 2, 3, 4, and 1, 2, 3. So we are in a downtrend. This is all very mechanical. So we identify our trend, we identify the arrow. And now the question is, do we have 20 pips for a 15-minute chart? We like to have 20 pips. We have 39 pips. Right now, that looks like a good entry. Let's go to our 5-minute chart and just see how. So let's see. Let's mark the 1 to 15. So here's our bag entry. This looks pretty much of a good entry on this one. There's the entry. It's having a little bit of a pullback, which is okay. Across the moving averages. This moving average is now pointing down. It's coming back up to retest. Strong move down, retrace. And let's just see here. If we go from, let's see. I like this for the Fibonacci on this one. I like, here's the move down. It's coming back, pulling back. It's right now, it's pulled back to the 38% pullback. I would say if we did a sell stop entry on this one, right now we could do a sell stop at the entry level of the 72.71. That would give us, that way if this thing keeps on going up, we're not having to take the heat, but this way when it comes back down, if this thing breaks through this area, it should be coming on down. So let's try and, I'll take this one, go to trading, new order, and we're going to go with a pending order. We're going to do a sell stop on this one because the price is above where we want to go. And we're going to sell stop at 72.71. You could maybe get a better entry on it if you take it now, but you still might be taking some heat. And we're going to place the order on that one. So we have a sell stop on this. If it comes down, it should come back down and keep on going and hit, then go for our target. And we can modify this for our target. We can make our first target would be, I'm going to make it at the 38%. I'll call about 72.40. So take profit, 72.40, just to get something in here. And the stop would be, just put the stop someplace where we can, we'll figure it out. 73.18. If we enter at 72.71, 73.11, we'll call it. 73.11 for the stop. And we'll go for 72.51. That'll be our 20 pips. Modify it. So right now we're not in the trade yet. We had a nice little pullback. It's going to come back down. Here's where the arrow was. We still have strength to the British. The CAD is starting to show a little bit of strength to the British. Not a lot, but a little bit. And we'll see if it comes in and gets us in the trade. And here's our target. I don't know if that answers your question. Yes.
Arthur would like to know, can you please tell the difference between a sell by stop and a sell by limit?
Yes, I can. A sell stop you want to enter the trade when the price is above your price. Now, in this case, the price was above our price. A sell stop means is that when the price is above, you want to enter the trade as it comes down through. That would be a sell stop and continue. If you wanted a sell limit, then what you would have done is you would have your price was below where your limit was. And so let's say you had a limit price to say, I will get in if it's up here. So this is a limit. This is where you say, I don't want to get in the trade unless my price reaches this point. This way the price was below where your limit was. It comes up, gets you in, and then it wants you to go down. So the limit is basically if you want it to come up to hit your sell and then enter. This one is you want it to enter as it comes down through your sell. So really the difference is where the price is at the time. Do you want the price to come up to get you in, or you want the price to come down to get you in? As long as where I had it right here, as long as this thing could have kept on going up and up and up, and I wasn't taking any heat with it. I do like this is the fact that it came back, it only went up to 38%. That's I would have you would have had two choices on this. You could say, okay, if it gets up to the 38% retracement, I want in. Or you say is, well, it may go 38%, it may go 50%, it may go 60%, you don't know. So since you don't know where it's going to stop, you say, okay, if it goes up to 38% and turns around, now I want to get in down here. So this would be the limit where the price is above to go short. And this would be the sell stop where the price is already above and you want to come down through to enter your trade. And that's really what the difference is. And there's our 15-minute. Didn't see any 15-minute alerts on this one. Now we are in this trade now, and make sure we have a stop, we have our targets set. Let's take a look at this U.S. Swiss, see if we want to pull that trade or not. U.S. Swiss. So right now, this was a buy stop. So in other words, the price was below where I wanted to get in. It hasn't entered it. It hasn't come in yet. If it starts getting some strength, it's come in, enter me, and then I like to see this with a buy or sell stop. I like to see it pulls back, and then it has the momentum. It's like a slingshot. You pull the arrow back, and it slings on up. As it slings up, it gets right through and just keeps on going. A lot of times, if you do these these sell stops and buy stops, what you do is you have the pullback. So the more it pulls back, and the stronger the next move up is. Oftentimes you don't get the drawdown, just get you in, get you out all in one clean swoop. That's one reason I kind of like it. It's kind of a breakout. In some ways, it's kind of a breakout trade, but in some sense. And this one, the fact it came up, we have this little wick here, I think I'm just going to pull this trade. Don't really like it that well. I'll pull that one off, take that one off. We're still in this one. And let's go back to the British CAD. Take this one off, save my space here. Okay, we're in this trade. So you see where it came back down, pulled up, pulled 38%. This is why I like this target right here. Here's the zero line. This would be the first target. Well, the first target, if you entered on this pullback, if you entered up here, this would be your first target. The fact we're entering here, the next target would actually be all the way down to this line. But we can make it that way, but it does have to get through another little trend. As you see, this thing starts turning around here. We need to find our 200 moving average. Insert indicators. Over here, trend line, moving average. Make this 200. Make this some purple. That's what I usually use for the 200. And we exponential and click OK. See where that is. And right now, see it's bouncing right off the. If it can't get through this zone right here, we may just have to cut this one short. It does have this little. We'll probably get a little bit of a bounce on that. I do like the fact it pulled down, crossed over the moving average. But if it starts moving, it got us in. But if it gets up to, I'm going to move my stop. If this thing's going to work out, it should work out. I'll put it right about in there, 5 pips above. Let's see, there's 687, so I'm going to make this 93. I'm going to move my stop to 93. If it got me in, but I am expecting this thing to come back and go on down. If it comes back and retests this, then I'm going to be out of this thing. Because this could be a Fibonacci from this direction, coming up, retracing, and then going back up again. We had it this way. Here's a strong move up. Here's the pullback. Now this right now is pulling back. Let me try this over again. There's 2 ways of looking at this Fibonacci. One is that this is the move up, pull back, crossed over the moving averages, and it could go up higher. Or you could go, this was a drop, base, drop to retest this level down here. It could go either way, quite frankly. But if we have our Fibonacci from low to high, here's the pullback. Here's a 61% pullback of this up move. So right now, this is basing, this dropping, basing. It's trying to get through this area right in here. If it can't get through, then I'm going to tighten up my stop. And we won't lose a whole lot. Let's see what our overall direction is. The overall direction was a down move, so that's one reason I kind of like this one, to the downside. You can see this zone right here from this low peak, there's a lot of buying pressure right around this price range. If you look at this high right here, and you look at this low right here, and you see this is the zone where it's in right now. It came into this zone, broke, base, went up, it's coming back down to retest this area. So right now it's kind of in a little bit right in the middle of this move, between this move up here and this move down is right in the middle of this range. So again, we're just playing the odds a little bit and just seeing which way it's going to go. We do have a down arrow. We have a bounce arrow to the go side. And that's why we're looking at, that's why we took this trade. Any other questions?
When you get a chance, one would like you to show some more wedges. Just trying to practice them.
Okay, let's see. Well, it's always with the wedges too, is that first thing what I usually do when I look at the wedge, and we'll just use this as a good example here. I usually start to look at what the high and the low of the previous day was. These are your day breaks. This is all the price action of Tuesday. Now we're into Wednesday. Here is the high, here is the low. So I usually start with the previous day's high, previous day's low, and see if we're making lower highs and if we're making higher lows. So I'm looking at this is the box. And so I'd be taking from this point, the high from yesterday to the high for today. That's one wedge. Now you're going to have wedges inside of wedges. So here's the first one. Here's the yesterday's low. It came down, went up, retested. So I'm going to start from this point as opposed to this one. I mean, you could use, there's a low, here's a higher low. So you could draw this in 2 different ways. You could take the absolute low, which would be right here, to this one and draw it this way. That's one way you could do it. You can see that's a relatively shallow wedge. Well, then you could take it from where this price from this point where it went up to this one, you could take it from here and see how many, you try to get at least, you try and connect 3 dots in a row. It has an anchor, a mid hit, a higher hit, and that's, you want 3, ideally you want 3, before the trend line is validated, you need 3 hits on the trend line. Now this would be the first hit. It came down, breached it a bit higher, and this is a much stronger move. So this point to me is more important than this one. So I'm just going to back this one off right to there. So that's the more important trend line right there. Now here we had the break. It came down, it broke the trend line, broke it, came back, retested. It went up into this area a little bit more, but so you have your bigger wedge, and now you have a strong, it broke it, came back down. Now you have your smaller wedge here. Here's a high, here's a low, here's a lower high, here's a higher low. This ain't, and it's right in this zone. So we have the secondary wedge, which you look for the strong down move, a retrace, a retest, and then you have where it came back down to, it broke this one, came back down, made a low, came back and retested the wedge. That's why I like this trade is to the downside. We may take a little bit of heat on it, but we got in off the arrow. And right now we have a point right here we have to get through. Let me get this Fibonacci off. We have some of the lines here a little bit. So now there's a high, here's a low, a lower high, a higher low. There's your little flag pattern. Now we've already broken through it with questions. It hasn't really gotten through this point right here. Oh, don't move that. This little pivot right here is where the bottom of this zone is. Once it gets through that, I'll feel a lot better about this trade. But right now, it's still fighting. You have this moving average right here, it's still fighting it. But right now, it's inside the smaller wedge. It did show a nice move, has small retracement, which means this still has command. The buyers still have command, but the sellers are giving it a little bit of a pause. And you see where this zone, you still have your uptrend, and the trend line is still above the zone. That's why I got to keep my target a little bit above, because if this thing comes down, it's probably going to bounce off of this trend line. And by that time, we'll be out of this trade. That's the technicals on that one.
Good morning, folks.
Good morning, Matt.
Morning,
How you
Matt.
guys all doing?
Well, we're sitting here. We're in a trade right now. We did a buy or a sell stop on the British CAD. It is a little bit of into a zone where we have uptrend. We have a bounce arrow to the go side, but it is in the downtrend, but it has it's having a little bit of a problem getting through this little area. But we did do a sell stop. We just got in, we tightened up our stop, and we'll just wait and see what happens here. I'd like to keep the stop above this. I may want to move this up just a little bit higher here, just to keep it, because here's a drop, here's a little bit of a base. I do have this trend line right here. I want to keep this. I like to keep a little bit. I'm going to move this up just a little bit higher. I kind of like this spot. Just a little bit higher here. And so I like to get on my trades rather than have it stop me out. So I like to give, because as I'm watching this thing, I'd like to, I don't want to just come up and take my stop only to turn around. So I want to keep it a little bit out of harm's way, but I'm still looking at where this pivot right here is. I don't want to really see a close above this line right here, the 82.88, 72.88. Because this is your trend. Here's the origin of this long extended range candle. Came back up, tested it. That's the first hit. Came back down, and now it's retesting this trend line right here. And you can see here's a high, here's a lower high so far. If it breaks this pivot here, we may need to be changing direction, and then we may be going to contra trend trade up to this area.
Yeah, and then if you take it in the other direction now, then you're gonna be able to make up your you're lost pretty quickly, right?
Yeah, that's the other side of that coin. If you do get stopped out, you have two choices. Either one, re-enter because you just got stopped out, or the other one would be that you want to reverse positions and know that, and you still might be able to salvage the overall trade. British CAD, let me see what this thing looks like on the. And it does have some upward pressure. Let's see the CAD, British CAD. Right now, the British is showing a little strength to the CAD. So that means it does have a little bit of strength to the upside. Yeah, if this thing comes up and breaks too much, I'll probably reverse position. We may get an up. There's a good chance we may get an up arrow on this thing. This could be that market maker move that we often talk about, where it just comes up, hits it, comes back down, pulls off, comes back up, retests the trend line, and comes back down again. But we'll see. We'll see what happens here. There's a couple of opposing forces. One is not overly strong to the other one.
Al, there's a Q&A that I don't know if you want to address now
Okay.
or in a little bit.
So the question is, there have been times that the bag strategy didn't work, which that's true. It doesn't always work 100% of the time.
70%, right? Based on what I've experienced myself, it's about 70% accurate. So you're gonna lose some trades. You don't get discouraged. You just keep on taking the other three, right?
And so the question is, do I think there's a difference of probability between bag in a lower time frame like the 5 versus the bag at a higher time frame like the 15 or the H1? I think the bag was designed on the 15, that basically the optimum time frame that the bag was set originally when the developer developed it was the 15-minute time frame. Whenever the lower the time frame you go, the less your expectations of meeting that 20 pip target. That's why you back the target off. The lower the time frame will get you an earlier entry to the higher time frames, but you're going to get more volatility at the lower time frames. It's probably a bag entry on the 1 hour is probably a safer bet, but you're also going to have to increase your stop and your target. That's why they say on 1 hour using a 50 pip stop or 100 pip stop and a 50 pip target.
Or to the other zone, right?
To the other zone, right?
So zone to zone is generally
right. So you need to. It all depends on what time frame you're the most comfortable trading. What's the stop and target area that you're the most comfortable with? I personally like looking at the 15-minute chart, and I like taking 7 pip targets. But that means that allows me to have rather than a 40 pip stop, it allows me to have a 15 or 20 pip stop. I cut my stop in half, but I also cut my target in half as well. So, so you're more likely to get a 5 or 10 pip move within a shorter time frame than if you have on an hourly chart where you need to have bigger swings, because you're just going to be in the trade longer. So it really depends on what your risk appetite is and what time frame you find to be the most comfortable. I don't like sitting in trades. I don't like sitting in trades for hours and hours on end. I like getting in, I like getting out and moving on. Some people can handle being in trades for days and weeks at a time. If you're on an hourly chart, you can expect to be in the trade for a couple of days.
Yeah, that's the reality too, Al, is not everyone can trade the New York session, right? So if you can't trade the New York session and the London session, maybe it's worth your time to evaluate strategy 2, which is the one that deals with the swing trading, more or less, with the 1 hour chart. You can still make some pretty substantial money when you're doing your same concept, same principle with the bag strategy on the 15 as on the 1 hour. It's just that it gives you that flexibility of going to live your life and not sitting in the charts. You know, it's all about what you want, what fits your lifestyle and how you want to trade, right? There's no one to say that how Al trades or how I trade is the way that everyone has to trade. You know what I mean?
I say if you can't or you don't want to be sitting in front of the computer, if you take it in the U.S. session, you're probably better off doing a higher time frame and giving a wider berth of price action, because oftentimes you may take the trade in the New York session, and it won't conclude or won't finish its move until the London session, which means it's going to be almost 24 hours later.
But some people would just rather do their setup and walk away and look for making maybe 10 or 20% a month, you know?
Yeah. It really depends on what your risk appetite is and what type of a trader you are.
And what kind of goals you have, right? Well, like what your capital, right? Your trading capital. Do you have a substantial account? Well, if you do, then maybe you can look at the swing trading. But if you don't have a substantially large trading account, like a couple $1,000, then you're going to be over risking on these swing trades because you're going to position size based on your stop loss. And the bigger your stop loss, the less dollars per pip that you make. So, for example, if I have 100 pip stop loss, then every 100 pips, I will make whatever I put my risk in the trade, say 2%. Now, if I'm using 20 pip stop loss, then whatever I risk in the trade, say 2% this time, well, every 20 pips, I'm going to make 2%. So here's the key. The person who's using the tighter stop loss is going to make exponentially more money per pip gained than the person who's using the larger, fatter stop loss. Well, to the point where it's 5 times as much.
Well, the other thing too is you can only take the smallest position you can take is a 0.01 position. So if you have a 0.01 position, which is your smallest, and you're using a 100 pip stop loss, you have to make sure you have enough in your account to cover so you don't over risk that account.
Agreed. The last thing you ever want to do is to over risk on a large stop loss. You don't need to be doing that because if you do get hurt, then it could set you back quite a bit and it's not worth it.
See, here's this move. Here is the, now we're starting to get a little bit of taking some heat on this. This may be, even though this is a downtrend, this could be a contra trend move as we approach as we're into the contra trend time frame. One thing that we had the break of this trend line right here, they broke the trend line, but now it's also coming back up to retest the trend line. So now my stop is all the way up here, but now if I start getting a close above this point where the top of this origin of this trend, if it breaks through this area, it's probably going to stop me out. But right now I'm taking some heat on it, but you can see where this trend line is still being held right in here. And let's see the British CAD. Let's see if the CAD is getting stronger at all. In this move, we want the CAD to get stronger to the British pound, and right now they're still kind of fighting each other right now. It's nothing real conclusive. And I like the candle. This candle is a nice little wick. We're on a 15-minute chart. The 15-minute candle came right up to the trend line and is being rejected. If we go to a 5-minute chart, this week kind of fine-tuned things a little bit. Came up, pulled back. Came back up, it's pulling back even harder. Now this is on 5 minutes, so we can see what this 3 candle formation is going to look like here. But right now, this trend line is holding. I couldn't get a close back into the trend line. So right now, this is the area that it's looking at right now. And we could be getting some engulfing candles here. Right now it's playing inside this area. If it breaks through here, I'm going to be out of this trade. If I get a close above this trend line, I'll probably be out of this trade and maybe start looking to reverse my position. Here's a strong move down, came back, formed a zone, came back out, retest the zone. Here's the wedge that we drew on the bottom of this. This is on a 5-minute chart. Here's the low. Here's the higher low. This is the trend line. It broke the trend line, but still, this trend line is still in command right now. So right now we're still, it's still undecided which way it's going. It came into this blue zone, came back out, came back deeper into it, came back out again. That was this candle formation is going to tell a big story right now to see. We have lots of wicks, but if we can get a strong move up with and close into here, it's probably going to go up higher. In that case, I'll be out of this trade, then I may reverse my position. We'll just have to wait and see. But now it is starting to, this moving average, it did close, the arrow moving average is now starting to point up. My 200 moving average is, you can barely see it. Let me take this.
Yeah, what's with the blue zone, Al?
Oh, I just drew a rectangle. That's all.
Oh, okay. I thought you had a different version of arrow or something.
No.
Oh, okay.
I'm just drawing.
I was gonna get jealous.
I'm just drawing some zones here. So right now it did break this downtrend. This was the wedge, but this one's still in command. This one's still holding this. This could be a head fake right here. This could be a trap right in here. But we'll see which way it's going to go. Now, if it comes back up, if we start getting the strength to the British pound starts gaining strength to the Canadian dollar, then and there we have an up arrow on the 5-minute chart saying that this thing is kind of reversing positions. I don't want to get out of this trade just yet, although it is giving me some heat here. Like I said, we were in a downtrend. Let's see the changes on the 5-minute chart. The 5-minute chart says it's in an uptrend. 15-minute chart said it was in a downtrend. This is where different time frames gives a little bit of a different story. You see, it just keeps coming up this trend line, gets rejected. The higher time frame said it was in a downtrend. The lower time frame says it's in an uptrend, which means it's basically bouncing, is playing inside this area right in here. And we'll just keep on. I said this is one reason why I prefer to stay on the 15-minute. If I'm in the trade, I'll look at the lower time frame to see what the lower time frames are doing. And we can also see right now, we're looking at the British CAD. You can see right now the Canadian dollar is the weakest. The British pound is starting to take over to the strength. Canadian dollar is now the weaker of all the currencies. The Canadian dollar is starting to get stronger. This may be time to be getting out of this trade. So I'm just going to pull this trade. Now I can possibly reverse positions. We'll see how this 5-minute candle closes. If this thing closes, then I might go ahead and reverse my position to take it long. It's breaking this little wedge here, came back up, and we'll see what happens here. Now we have all of our moving averages are moving in the right direction. We've got the 200 down below, the arrow moving average is up. They're both pointing up. But I do want to see this candle close here first. Notice I did not wait until I got all the way up to my stop to wait. But I'm going to wait for this candle to close. It's going to close in another 2 minutes. If we get a candle close on this, then we could maybe reverse positions. And so from here, we've got 28 pips to the upside. I actually like this a little bit better to the upside right now.
From hindsight, Al, it looks like it might have been like a trap on your bigger wedge.
It could have been. Yeah, it
You
could have
see
been.
that little W at the bottom?
This little.
Yeah, right there. Boom,
This
boom, 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 boom.
Retest, yeah.
And then you have a little wedge, and then you have a fake out of your bigger wedge. But that's not, you can't see that when you're taking the trade, because that was a good bag setup. You
Yeah,
know, bounce, arrow, go. That was a
bounce, arrow,
good
go.
setup. It is what it is.
Yeah. Now on the 5-minute chart, it's in the right direction. It's in the right momentum on the 5-minute. So once this candle closes, let's see, candle closes inside this trend. Then we have everything's moving in the right direction on the 5-minute, and with the British pound is showing strength on all time frames. So now I'd be okay taking this thing long, but up to this area. I'll wait till this candle close, till I get the candle close here. Because if this candle comes up, if it closes out on the bottom of this trend line, then this could be another head fake right here. I'd like to see it close above, right about where it is now or higher. I want to see it close above this trend line. About another 28 seconds. It looks like it has the strength to the upside. There's the close.
Hey, Al,
Yes.
just so you know, good news on this too is if you go to the 15-minute, we just got an arrow. The 15-minute
Okay.
upward arrow on the 15-minute on
okay.
GCAD.
Yeah, we just closed on a 15-minute candle. Go to 15-minute chart.
You're on
So
the
that helps.
go to the 15-minute.
That helps to confirm. That helps to confirm
Yeah.
that right now. So I'm
Yeah.
in this trade. I saw a reverse position. I was out of it. I took my hit. Now my target's going to be right up in here. And we have we've got 19. It's close enough to 20 pips. I'd be willing to take that on 20 pips. And so we're going to set our target and set our stop. Modify this. And if we're wrong again. But I'm going to go for the 15 pips on this one. I'm going to go for I'm going to go for 40, see where the 40 pip stop takes us on this. Stop is way down here below the moving averages. And my target is just a little bit below the zone. And if it comes up, it should come up, maybe retest this trend line. And it does have strength. It did have a little bit of a, let's see, 5. Yeah, this was a little bit of a consolidation. You can see where the price came up, based, went up, came back down, retested this little area right in here. This is where that area where I had the that blue box here, right between these two lines, these two blue lines. This is where the price seems. This is the magnet area where it comes in, where the price came back to retest this area. Move up, base, strong move out of there. When you have a strong move out, this is the origin of that strong move. Came back down, retested it, couldn't make a lower low. Came right down, bounced off the 200 moving average. You can see where those things really make a lot of difference. People are looking at those levels. Bounced right off the 200 moving average and then shot back up again. And now it's continuing now if you look at this trend line, we have this low. We had the bounce. This is a strong move that bounce out of there. Here's the new trend. This trend line was the trap in here. We can take this trend line back out. And this is the new area right in here. Kind of a slow day today on the alerts for a Wednesday. And this is also sort of like a Fibonacci retracement. So remember we were saying that reason I drew it this way because I had the wind to my back on the 15-minute chart. But this is the move up. Here's the pullback coming back up to retest. Here's your M. Here's the first shoulder of the M. Here's the middle of the M where it came back down and bounced off the zone. Now I'm looking for it to come back up and retest the trend line. It may come back down to about where I'll use the corner of that zone that we have.
It's a good example of wedges and how they act also. Someone mentioned wedges. They wanted to see some wedges. Well, you're getting wedges, guys.
Yeah, this is part of your M formation. Here's the left shoulder. Here's the middle of the M coming back up. Now, it could come up and blow right through, but my suspicion is going to be you have a little bit of it's starting to lose this. It doesn't like this area. Just to flatten that one out. And then use this peak. I could see it possibly coming back into this zone right now. But right now we're looking at the bottom of the red zone to take our profit. And like I said, the British pound is starting to show some strength to the Canadian dollar. And all you can do is weigh the probabilities and then take the trade. No, like I say, you're not going to win them all. You just plan your trade and trade your plan. My plan was if it came back up and broke through this wedge, I was going to get out of it. And the other plan is that if I broke out of that, to look and see if it had the strength of the currency, in this case the British pound, had the strength to maybe drive it back up to this retest area. Plus we had a 5-minute and a 15-minute candle to confirm the direction. This is a bounce arrow go, and on the 5-minute chart, it was right now the 5-minute and the 15-minute time frames are kind of fighting each other. Let's see what the S&P is doing here. Here's the move up, and here's the retest, rejection. Now we have a down arrow on the S&P showing some. Where's the dollar today? Dollar is starting to show a little bit of strength than it was earlier. And we'll see. Keep an eye on the trade that we're in until we get another alert. British CAD. I like on this 15-minute chart right now, we have a trending candles. We have, if we look at the candles on this, we have, even though they're red interior candles, these are green candles, these are bullish candles. We have a higher high, higher low, higher close. Next candle, we have a small pullback. We'll probably get a higher high, higher low. If we get a higher close, we're getting up closer and closer to that target zone. So it is now starting to trend. We had green, pullback. Here's the trend line. Couldn't break the bottom of this pivot right here, and now it's making, as you see on the left-hand side, we had low, lower high, lower low, lower close, lower high, lower low, lower close, and all the way down. This was a trending down here, came back down. Here's where it started rejecting the downward move, and here's where it broke out to back retest the upside. So right now it's trending on the 15-minute. We can just be watching these candles, and really we can keep moving. We can actually start moving our stop a little bit, although I generally don't do that. But right now I'm looking at this area right now. If it comes back down, retest this zone, my stop is still way below here. I'm giving it enough room to, and if we get a strong move, a strong wick candle up, and it can't get me out, it can't take my target, then we may be looking for another reversal. Aussie US 5 minutes, Aussie US 5 minutes. Take a look at that. And here's see what our trend is on this. We're in an uptrend. With an up arrow.
Uptrend into that zone.
Yeah, right into the zone.
You know what happens at the top of these runs, right, is you might have a lower high, and then you're going to have a wedge formation, and it breaks down and does its correction to 61.8 or whatever. You know, when you have a really long run up like that,
Yeah.
like it's a substantial run, and it hasn't really corrected.
This was the overnight low. Here was the entering the money zone. Here's a hit. Here's a hit. You can see from this trend line, this is not quite, it's pretty close. I mean, it's still a valid trend line. Where we're going to bring it down to the low of this candle right here. So here's the anchor, here's a near hit, here's the touch. And then we have, this is where it broke, came back, retested it. But now we also have a trend to the upside. So it broke this upward trend. It broke this, it pulled back. Here's a pivot, pulled back up, retested this. Made a new low. Broke this pivot, closed below the pivot. And so here's your other wedge. So now it's sort of coming into a somewhat of a downtrend. Here is a rejection. This could be the head fake. It's still losing steam to this zone up here. It's now actually making, we can use this at a little bit of a higher point right here. And we'll see what happens with this. Right now, the Aussie US, the Aussie is strong to the US dollar on the higher time. Here's what I'm looking at with this. Aussie strong, US is in the middle. Aussie strong, US is in the middle. Aussie strong, US is in the middle. And now we're having the indecisive part right here. Aussie strong, US is weak. So on the lower time frames, it's still strong, but the dollar is gaining a little bit more strength to it. As the dollar gains more strength, this thing should start coming back down again. Right now on the higher time frames, the Australian dollar is still strong, but is losing ground a little bit. And I said there really isn't that much room to the zone from the arrow to the zone. You only have 5 pips. So it's not a trade to take long. And there are some days that things just don't work out the way they plan them. That's trading. But no, it's still respecting the break of this trend line. Here's the trend line. It broke it, respected it. It came back down, still respecting it, and it's also respecting this. So right now, this is a point. This could be a trap right in here, this area. This could be a trap. Let's see how our trade's doing here. Looks like it's got 10 pips against us, which is still well within tolerance. British CAD. Still made a higher high, made a higher low, but it did make a lower close, and it's a close right at the mid-range of the previous candle. That's kind of a neutral candle right there for us. Still above the moving averages. Moving averages are still in the right direction, still pointing in the right direction. It just needs some time to breathe. This is where if you have your stop too tight, you'll just sit there and get whipsawed. And usually I'll take a trade. If I reverse position, I'll reverse it once. If it doesn't work out, then I don't address that pair because it's not playing in the same ballpark that I'm playing in.
Yeah, no, it gets screwy, right? And it messes
Yeah.
up your head, and there's like 28 currency pairs you can trade, so there's lots of other opportunities out there in the ball field.
Yeah, but right now there's nothing to worry about, nothing to be thinking about. We have our target, we have our stop, and everything is just right now it's just going sideways. And so you just sort of Keep stay with the plan.
Yeah, how do you say that? Keep your powder dry for later.
Yeah, keep
Get
your powder
everything
dry,
ready.
but also but stay with your plan. And the plan also has to include that you let it breathe, you let it just base, you let it go sideways, let it stay within your range, and just keep watching the price action. Keep watching the overall strength and just let's see what else. The British CAD, you can look and see where the daily range is on this one too. Daily range is 99 to 96. So right now it's right at its daily range. It's already pretty much traveled the full length of its pips. That's not something I've been paying a lot of attention to, but in fact, we have it here. We may start looking at that a little bit closer, see what the ranges are. If its daily range is 100 pips and it's already gone 100 pips, that means it's just going to be basing inside that range for a while. And that's where you can get yourself into trouble.
All right. Well, I'm going to go get the other room set up there. If you
Okay.
guys have appetite for that, I'd love to see you guys all in there, and we'll be working on some more trades.
Well, today's
Potentially
COVID
after
shot.
market opens.
Today is
Oh.
my COVID shot 2
Oh,
day today.
exciting! Good.
So I have
Okay.
to leave. So I won't be in your room today.
No worries,
man.
man.
I'm going to go and get myself vaccinated so I can get on an airplane, I guess.
Yeah, I won't be able to make it either, Matt. I've got to leave right at 9 today.
No worries, no worries.
So I guess you're on your own there.
We'll see how it goes. Anyway, I'm gonna go get ready for that. We'll talk to you guys later. Thank you for the great session there, Al.
Have a good session, Matt.
Will do, man. Bye.
Matt, talk to you later.
Bye, guys.
I like the way this thing broke this trend line, came back down, and it bounced right off the trend line. I like that fact. It bounced right off the moving average. This is an energy point right here. We have a trend line and a moving average all at the same point. You can see where they're both connected right there. And so that's a good sign that this thing's going to go up higher. Here's the strong move up, came back down, retested it. And you can draw a little Fibonacci retracement right off of that, and you'll probably get it right up into that target area. Let me see here. We draw from here to here. Here's the move, pulled back 50%. Here's the target. I'm going to move this target down just a little bit, just to catch that 38% area. We're only down 5 pips, coming back up into our entry with some strong momentum here. British CAD, let's see. Let's see if that's all fitting. Yep. So far, so good. The Canadian dollar is not overly, or the British pound is not overly strong to the Canadian dollar. And here's a 5-minute Euro New Zealand. Let's take a look at that one real quick before we go. Nothing here. We're on a 5-minute chart, right in the zone. And just it's basically just basing right in here. My templates load. Let's see what the 62 is doing here. Here's our 200 moving average. It's way up there. So there's lots of downward pressure on this. And see if it's fine. This could just come straight down, could be basing, it could go down lower still. I wouldn't touch that trade right now. Put on a 15-minute chart and see what it looks like on that. Downward trend or downward momentum anyway. All of our moving averages are pointing down. And I would say be looking more, right now I'd be looking more at selling pullbacks to go short. Let's see what the overall trend on this one is. Overall trend is up in the upward on this chart. Arrow up. The higher time frame is pointing up. Actually, this is on the 50-minute. Go back to the 5. No real clear direction on this one. Yeah, we'll pass on that. Just take that one off. I don't like that one. This one's still working out okay. And I like this target. It pulled back. Let's see, we got a couple different trend lines here. Here's the move up, pulled back 50% of this move. And here's the first area target. We didn't get in. We got in right at where the target was, where the high was. And as we're looking at, it could go on up to the 50%. Just to pull back 50%, we could be looking at, this is target 1, target 2, target 3. I'm going to try and get out of target 2, the 38% extension. About 5 more minutes before this 15-minute candle closes. We'll see if it can get a nice little, that would give a hourly candle, a bullish hourly candle on this. 1, 2, 3, 4. This would be. One thing you can always do is you can look and see where the hour is. This is the close. This was the open of the 8 o'clock candle. This was the open, pulled back a little bit. And right now we're looking to close. So if you look at this as these four 15-minute candles, you can be looking at it as one very bullish hourly candle. And that's where it breaks down these higher time frames a little bit to see what the price action is in the higher time frame. You can look at this as being one. Let's see if I can. You can look at this as being a 1 hour candle right here. And it's going to close pretty much at the top of the candle with very little wick. It may pull back a little bit and then it's going to shoot up, and then it could shoot up. So this would basically be a bullish hourly candle. And there's another 2 minutes to go. And you can look and see right here, in case for those of you who don't own this dashboard, it shows you how many more minutes are left before this candle closes. The hourly candle always have 2 minutes before you're going to have a close of all 4 time frames.
Look at that. Absolutely no alerts.
It's been really slow this morning. I'm surprised for Wednesday. It's usually a lot more robust.
Yeah.
There's a lot of indecisiveness out there in the markets.
Yeah. Seems to be.
It's having a hard time getting past this pullback here. But right now, it's still in a upward trend.
Yeah, there's a resistance zone on the 1 minute. It's only
Right,
got
pretty much right where we're at right
2
now.
hits though. Yep. Right on it. If you go to the 1 minute. I like it though. It's a higher high, that other touch there.
Yeah, here's a little doji right here. But again, on a 1 minute chart, you have to really take that into, don't be putting a lot of weight on these price actions.
You got 1 minute warning there, Al.
There you go. There's the close. Let's see, we've got some 30-minute, no 15-minute euro yen. Didn't show it on we have it on here. We don't have it on let's go with the euro yen, 15-minute. Whoops, I didn't want to do that. I just learned something about that. There we go. There we go. Delete it. Now, euro yen. Let's take a look at that. 15-minute. We're in an uptrend. Here's an arrow. It didn't get the bounce, but we did get the arrow. Here's an arrow down to the trend line. And there's a room to the upside on this. And to wrap this thing up, it looks like it's past our time. Matt's waiting for everybody.
Yeah.
There's 13 pips to the upside there. Yeah, this one's we're in the uptrend. We have up arrow, only 13 pips. I would, British USD, British yen. Euro yen, I'm sorry. Euro strong to the, yeah. No, not a lot of strength difference between the euro and the yen, so just be careful with that one. Well, and with that, I'm sorry we didn't have a little better luck this morning, but that is what trading is all about sometimes. So thanks everybody for coming in. I got to go. I got to get on the road here to get my second COVID shot here today. This is the shot day. So anyway, thanks for coming in. Matt's waiting for you over in the other trade room, and we'll see you tomorrow, same time, 7:30 to 9. Talk to you then.